The fact is that Bitcoin is kind of taking market away from gold. It's taking market away from fiat money. It also takes market away from the so-called altcoins. And I guess the second biggest coin, or one of the biggest altcoins out there, would be Ethereum. And you've written a piece for Keiser Research, quote, "A Rube Goldberg of buzzwords. 7 reasons to sell all your Ethereum today and buy Bitcoin." Right, we don't usually talk about altcoins, but this piece was pretty compelling. Tell us about it. Yeah, as I've been saying, I've been following this for 35 years. And so far, nobody has beaten the market, any professional, any market, except for maybe 2 or 3 people. Nobody beats the market on a consistent basis. There is no evidence of that. After years and years and years of research and compilation of data and publishing of data, there's been no successful trader who has consistently beaten the market in a meaningful way over any consistent length of time. Right. If you go to, Giovanni, if you go to a casino in Las Vegas and you talk to every gambler in there, they'll say, "Oh, we're making lots of money. We've always made lots of money. I'm making money gambling." No gambler tells you they're losing money. Anyone who's telling you they're making money in altcoins is lying. You may make money 1 month or 2 months, but are you going to make money over 5 years, 10 years, 15 years gambling? No. We know categorically, emphatically, without equivocation, the answer is a big fat no.
Guess is we probably have a sell-off and then it rips again, because that is the path of most pain. And markets tend to have the path of most pain. Why is it going up right now? Because the institutions aren't in and there's no ETF, so retail aren't in. So the path of most pain is it going up while people aren't in. But the path of most pain would be a bunch of people sell out thinking they're being clever and the market goes up. Why will it go up? Institutional adoption is not going away. The retail ETF is coming. It'll come out in the next couple of months. So we're going to broaden the access and we're going to bring institutions. Institutions tend to make asset allocation decisions by quarters. And my guess is January to March quarter next year, we're going to see a huge inflow because the ETF will be out. So pension funds and everybody else. So I think it's going to push it out a lot further. I think the other big driver of this market is going to be ETH 2.0. And the reason being is everybody is staking their ETH. It's creating this incredible supply and demand imbalance in ETH, where there's only about 11% of the total ETH supply available. Everything else is locked up for this staking, where people are getting a yield to secure the network for ETH 2.0, or people are just sticking it into wallets. So there's no ETH around, and exploding demand from NFTs, DeFi, and other investment, and there's going to be an ETF. So that's a ridiculous setup. But ETH 2.0, again, think of investor psychology. You've staked your coins, you're getting your yield, and ETH 2.0 is going to come out somewhere between March and June, let's say. Well, when it does, you don't need to stake as much because it'll be unlocked. So what you're likely to do is sell some of your ETH to buy a house or do whatever you want to do, because you'll have made plenty of money from it, and that will create a market shift. So even though ETH 2.0 is incredibly bullish because it turns ETH into a deflationary asset, it'll be a buy the rumor, sell the fact. So I think all of that means that we're likely to see an extended cycle, and I think it extends into between March and June. And that would be a new phase. And I think that makes sense as the network is seeing deeper adoption and richer adoption. I think, A, the volatility comes down over time, and B, the cycles extend and then the performance lowers over time. But that's okay, because we can find the other new network adoption tokens in the space, and they should follow how this all works. So it's all there and available. There's been 2 things happened in Ethereum that are game changers. One was the EIP 1559, which was the change of methodology with what they did with the gas fees. So gas fees got rewarded to miners, and what they did is reduce the rewards and instead burnt ETH with it, which is kind of like a share buyback. So that meant the supply of ETH was being reduced because of the buybacks. So it went from about 4% supply to about a 1.5% supply of ETH. So now there's not a lot of ETH. And we talked about the other supply and demand imbalance. So obviously the price starts going up dramatically from that moment, which was over the summer. And ETH 2.0 is somewhat more powerful because here they're moving to proof of stake and not proof of work. Proof of work, to remind everybody, is what Bitcoin is, which is to use complex calculations by massive computing power to solve these puzzles that reward you in Bitcoin. That's what mining is. But proof of stake is different. You get rewarded a yield by staking your Ethereum to secure the network. Uses infinitely less energy, but is also very secure and very efficient. And it's going to create a further issue with supply. And what that's going to mean is ETH becomes a deflationary asset, i.e. each year there's likely to be less ETH than there was the previous year. And if there's still network demand for ETH, well, then the price rises dramatically. Now, the question is does that bring down the fees of using ETH enough? Probably. But if not, okay, people are going to use different chains because, ETH becomes more expensive to use. But, this is a really, really powerful thing. And I think the ETH cycle is going to be a big driver of everything. It's really simple. I just keep it as idiot-proof as possible. The internet was the fastest adoption of any technology in all recorded history. The network effect was real there, and it was growing at 63% a year for the first phase. In 1997, there was 150 million users of the internet. Well, that magic number is exactly the number of users of crypto right now. The Bitcoin network, the crypto network, digital asset network, is growing, number of users is growing at 113% a year. It's twice the speed of the internet. This is the fastest adoption of any technology in all recorded human history, right? So you have to be kind of an idiot to lose money. Really, it's literally shooting fish in a barrel. Okay, so then what's the other aspect of it? What does that mean? It means that when we look at asset prices, asset market cap of equities globally is about 150 trillion. Bond market's about 150 trillion. Real estate's about 300 trillion. Derivatives, 1 quadrillion. FX market, I don't know, 10 quadrillion, some crazy number. So crypto is currently 2 trillion as of today. I think it's pretty reasonable to expect it to go to 200 trillion. So that's 100x. None of us have seen anything like an entire asset, which is a rich and deep asset class with many things going up 100x. And that's how I try to explain to people. It's like, don't overthink it. And as I said, everybody can make money. You can be complete idiot and get everything wrong and choose the wrong things and still probably make money. So just remember, it's all about time horizon, understanding the volatility. So therefore take the risk that you can afford to take. Don't leverage it and let it run.
The fact is that Bitcoin is kind of taking market away from gold. It's taking market away from fiat money. It also takes market away from the so-called altcoins. And I guess the second biggest coin, or one of the biggest altcoins out there, would be Ethereum. And you've written a piece for Keiser Research, quote, a Rube Goldberg of buzzwords, 7 reasons to sell all your Ethereum today and buy Bitcoin. Right, we don't usually talk about altcoins, but this piece was pretty compelling. Tell us about it.
Yes, well, a lot of people who are new to the space, they lump or don't know about the space. They lump Bitcoin in with Ethereum and these altcoins. But the reality is they're not even in the same universe. It's completely inappropriate to lump them in. So I don't think anybody is looking at Ethereum as a store of value. Anybody serious is looking at Ethereum as a store of value. So what I did in this piece is I just took a deep dive on it and looked at what is it, what really is it, and what attributes does it have, and compared them to Bitcoin. In short, Ethereum is not immutable. It can be censored. It has a flexible, arbitrary monetary policy that is hard to audit and is controlled by developers who prefer inflation. It has its network is centralized. Its network infrastructure is centralized into this company called Infura. So it's not decentralized in the same way as Bitcoin is. It has an unclear use case. Bitcoin has a crystal clear use case. It's a hard money monetary system that is accessible to anybody and controlled by nobody. But what real world it works? Bitcoin works in the real world, and it solves probably mankind's biggest problem, which is storing and exchanging value. That's what Bitcoin solves. What does Ethereum solve? As far as I can tell, I haven't seen anything built on Ethereum that has added any kind of economic value or solved any kind of real world problem.
No, it's clearly a pump and dump scheme. They have this enormous pre-mine, which is something, again, you don't find with Bitcoin, but with Ethereum, they've got tens of millions of these coins lying around, and then they go on these massive pump and dump schemes. It could be ICOs, it could be IEOs, it could be DeFi, and now you've got this NFT craze. It's just clearly a money laundering, pump and dump, Ethereum-led. It looks to me like money laundering, and I believe, last I checked, that's illegal, but there's a lot of people who are vested in it, and you've looked at the pre-mine, right? It's pretty big.
Yeah, well, the Ethereum pre-mine, there's a lot of problems with this. I mean, this is similar to the, if people don't know, basically pre-mine is something where people who are creating a cryptocurrency create units of the cryptocurrency before it's mined. The first block is mined, which is traditionally how new supply has entered into the system. So Ethereum had an enormous pre-mine. It's very similar to the shenanigans you'll see in the penny stock market with pump and dumps, where insiders paper themselves up with cheap paper and then dump it onto the public. Now, the thing with Ethereum that is problematic with this is its ownership centralization. The ownership of Ethereum has been and always is and always has been centralized into this group of people who participated in the pre-mine. And to this day, the pre-mine, I think it exists as it is to the current supply of Ethereum, is over 60% still to this day. But there's another problem with pre-mines, is that they're effectively offerings of unregistered securities, and that tends to get the attention of government agencies.
Yeah, a lot of people know that Bitcoin Cash and Bitcoin Satoshi Vision are exit scams written by, created and managed by narcissists and megalomaniacs. But a lot of people don't realize how bad Ethereum is and how risky it is, and what the probability is of them getting shut down for selling unregistered securities. But people do silly things, and so I think that would fall into the category of silly things. Now, with gold, the central banks of the world have all the pre-mine, you could say. They own most of the gold, regulate the paper markets on which the price is controlled. And, gold in a lot of ways is another altcoin at this point. It's got so many drawbacks, which were not obvious because until Bitcoin came around, people didn't really focus on the fact that, hey, you know what? Gold is actually a horrible store of value and a medium of exchange. As a medium of exchange, it's quite awful. As a store of value, it's not as bad as cowrie shells or storing old telephone books. Like Peter Schiff does. He's got a whole warehouse full of old telephone books that I think his whole wealth is stored in. But, compared to Bitcoin, it's really quite falls short. Now, would you ever use gold as a hedge unless you're a government or a central bank? I mean, you're big. Casey's big on gold. Is he totally going to switch over to Bitcoin entirely now, or is Casey still stuck on gold, Nick?
Well, the thing is that what I'm interested in is money. What has the best monetary properties? I'm not particularly wedded to anything. I want something that has the best monetary properties, and I want to look at that with open eyes and analyze that. I'm not writing off gold completely, but you're right. Going down the list of all the attributes of money, and money is not that hard to understand. Money is just something that stores and exchanges value. That's all it is. It's not complicated. So look at the attributes of gold and Bitcoin and analyze them on its ability to store and exchange value. Now, most people can't wrap their minds around this because gold has really never had any competition for thousands of years of human history. Now it has a serious competitor that could dethrone it. And the most important attribute of gold is, look at the history of money. The history of money is the hardest money wins. Bitcoin is now harder than gold. It's better at gold than gold. And what I mean by hardness is resistance to inflation. A lot of people think hardness is something tangible. It has to be a metal. It has to be something physical. That's not what hardness means. Hardness means hard to produce. So in other words, resistant to inflation. And why was gold money always? It's because gold was the one thing, the one commodity that was most resistant to inflation. That's what made it a good money. Bitcoin, and how do you measure hardness? You measure hardness with the stock to flow ratio. And that is what measures hardness. And Bitcoin now is harder than gold, according to the stock to flow ratio. So in that category, gold's most important attribute, Bitcoin, it beats it.